So Tesla is the first of the Magnificent Seven to release its figures. It's going to be this Wednesday, but let's just say after what we got last week, my goodness, stocks have been in for a decent climb. Hello everyone, Monty here, market analyst at IGE. Let's go ahead and get started because we got ourselves quite a bit to cover. I'm not going to spend too much time in terms of pricing data last week, but let's just say Wednesday's consumer price data, Thursday's producer prices, and trade pricing data on Friday. All the figures there, whether we're looking month on month, year on year, headline and core when it comes to CPI and PPI, or when it comes to trading pricing data, both export and import pricing data, all of them were lighter than anticipated. The one negative or slight one is that the consumer inflation expectations, preliminary figures out of U of M showing the 12-month rising a notch, 0.1% to 3.4, the 5-year to 3.1%. But take a look at the sentiment reading, jumping to 72.6. We haven't seen those kind of levels in nearly 2 years, and that's a very price-sensitive survey when it comes to consumers. So all in all, very significant and decent data when it comes to the financial markets, especially because when it comes to pricing data, good news is good news and bad news is bad news. Unlike when it comes to employment, where bad news could be translated as good news because that means that the Fed isn't going to be as hawkish, and good news is usually translated as bad news because that means the Fed now has room to continue its fight against inflation. And courtesy of Refinitiv, you look at market pricing when it comes to expectations of future Fed rate hikes, still anticipating one final 25 basis point increase next week at the FOMC meeting at the end of this month. But when it comes to that additional rate hike potentially in November, we got close to a coin toss at times. The probabilities, well, it has definitely pulled back and bringing forward the first chance of a rate cut next year because expectations are we're not going to get a rate cut this year at all. But for next year, they have brought forward that, and you can expect that if the data continues to beat, if we do get less speed bumps in the path towards disinflation, then you can anticipate that we'll probably have to see some bit of a pullback when it comes to market pricing action. Let's take a look at some of those earnings that we got last Friday from key financial heavyweights. JP Morgan was a beat net interest income guidance raised for the year. Wells Fargo also net interest income increase, but puts aside more for losses. Citigroup's slight beat on earnings, but still waiting that rebound when it comes to investment banking. And by the way, that's expected to continue to test those that are more exposed on that front, like Goldman Sachs and Morgan Stanley. And that given that we had the VIX pretty low and ended last week 14, but pretty low for the quarter, less volatility on the stock trading front. That means that those with trading desks ideally looking at the bond market because the MOVE index is still relatively high, even though it has come down last week thanks to that CPI print. And then BlackRock managing to beat as well as on AUM, but missing when it comes to net inflow. So what about when it comes to the week ahead? And I'm going to try and go through these a little more quickly because we want to get to Tesla, but we do have a couple manufacturing indices out of the Fed. We got the Philly Fed and the U.S. Empire is going to be tonight. We got retail sales tomorrow. And I think that overall, as a sector, we might be looking a little bit more at the housing sector just because you got NAHB's housing market index that's going to be on offer tomorrow. You got building permits, housing starts, and the weekly mortgage applications that's going to be out of MBA that's going to be on Wednesday. And you got existing home sales on Thursday. Usually, I mean, the numbers have been good for NAHB, housing starts, permits, as well as for new home sales. Not so much for existing home sales, just because of the story that people that have locked in their mortgages at lower rates, they're not looking to get rid of those. So that means that it's a bit difficult to get existing home sales to get moving. But if we do see improvement when it comes to the housing market, that's definitely something that's going to be noted for the markets because that means that's going to aid that whole Goldilocks scenario slash at worst slow session or rolling recession where it's going to be limited to certain parts like say manufacturing, but the rest can continue to provide growth and keep the economy afloat and ensure that there's going to be growth. Also, when it comes to earnings, we're going to have, I mentioned Tesla, we're going to get to Tesla, but Bank of America, Morgan Stanley, that's tomorrow. Tesla, Netflix, and Goldman Sachs are going to be on Wednesday, and you got Johnson & Johnson on Thursday. We did get some Chinese economic data this morning, looking at some of the items outside of the U.S. In this case, year on year, thanks to base effects, the second quarter reading, it was a significant one above 6%, but it was a clear miss. Retail sales was also a slight miss. Unemployment rate unchanged at 5.2%, but youth unemployment rising. And we got to unchanged over the weekend, unchanged housing price data. So in all the narrative is that, those looking for that big rebound when it comes to China, not quite getting it. And that means that the focus is going to remain on whether or not they can continue to offer whether or not we're going to get some more stimulus. So far, the PBOC or People's Bank of China, their policy decision is expected on Thursday when it comes to a loan prime rate. But when it comes to the medium-term lending facility, no changes on that front in terms of its interest rate. We're also going to get plenty of CPI outside the U.S. So for the U.S., we got it last week, but for Canadian CPI, that's going to be tomorrow. We got UK CPI as well as New Zealand for the second quarter. That's going to be on Wednesday. And for the UK, impacting, of course, those of you trading the pound, especially because there's been a lot of adjustments and movement and action when it comes to market pricing in terms of whether or not how high the BOE is going to get, the Bank of England. So CPI is expected to drop year on year to 8.2%, but core is expected to stay stuck at 7.1%, core year on year, that is. And for Japanese CPI, that's going to be on Friday, and this is ahead of their meeting next week. Whether or not there's going to be a tweak in terms of pricing, yet to be seen. A lot of traders, those trading the yen, going, are they, aren't they? Is there going to be any tweak towards the yield curve control, despite what policymakers are saying or pushing back against that there's going to be no tweak when it comes to their meeting next week, or it doesn't look like that's going to be the case. So with that out of the way, let's take a look at Tesla's earnings expectations. So if we're looking compared to the first quarter, the expectations that we're looking at earnings per share of 82 cents, courtesy of Refinitiv, and that when it comes to revenue, that it's going to increase from 23.3 billion in the first quarter of this year. I'm not doing second quarter of last year comparison, but rather the first quarter of this year, and that's because we had a lot of price cuts in the first quarter, and yes, prices are on average less for the second quarter compared to the first quarter, but the drop isn't as drastic. So deliveries, we already got the figures for deliveries before. It was a significant beat, 466K. There's still that gap to production. And just some things to note for the second quarter. You had price cuts that were much less pronounced compared to the first quarter, as well as and this, of course, helped boost its share price when the news got released, but the whole charging, whether using their standard or whether using their stations. And when it comes to analyst recommendations, this is out of Refinitiv. Before, when we took a look at this preview last time around, you had about 16 hold. It was 2 sell, 2 strong sell, 13 buy, and 9 strong buy. You look at it now, and this is after we had a big increase, and I'm going to pull up the chart in just a moment, but 19 are going for hold, 2 for sell like before, 4 are now going for strong sell instead of 2, 12 going for buy, so less for buy, and 3 less when it comes to strong buy. We did see quite a number of analysts change their recommendations especially once its share price reached or breached their target. And this is just mapping Tesla's share price onto the chart, and you can see that for all this time, and this is IG's client sentiment, they've been majority buy throughout this period. This is a weekly chart. So essentially, when prices came down and dipped very low, they raised their buys. They reached extreme buy territory around 88%. You want to look at the blue line, left axis, as percent long. So when the blue dotted line reaches 88%, that means that they've reached extreme buy territory, but majority buy this entire time, and obviously beneficiaries of the latest moves because its share price has managed to recover. And this has already been released on our website, the article about Tesla's earnings preview, but these are some items to note. The overview, which I'm going to pull up the chart in a moment in terms of explaining why it's got that, but it's seen as, I don't want to say bull trend, but more bull average. It's getting close to bull trend, especially if you look at it on a shorter term daily time frame. But if you look at it from a weekly time frame, which is a lot of time what you got to do when you're looking at these items, you're looking at a situation where it's more bull average, and that just means that if the upper end of the channel holds, if the upper band on the weekly holds, and I'm going to go ahead and pull up IG's trading platform, and here you can see Tesla, a little bit messy in this sense just because we're putting up some of these technical indicators, but you can see that if for whatever reason these hold, you want to be a little more cautious on the pullback. You don't want to just initiate with a fade strategy, nor even a buy on reversal off the first support levels. Maybe you want to consider actually buy after a significant reversal, just noting whether or not you're going to get a move back down to at least as I'm saying, if the overview is a bull average, it'll average higher little by little. But for those looking to trade those moves, and especially when it comes to a fundamental event, it's a bit more difficult for shorter term daily levels. These are weekly levels for the ones I pulled up, but shorter term daily levels, very difficult for those to hold. Weekly levels have a much better chance. I did put the link for the article for Tesla's earnings preview in the description. There's also the link to this week's weekly market report, where it has the key products, most popular products that are traded amongst IG's clients. So feel free to take a look at that. It's got the week ahead, by the way, just in case you need more details in terms of what to expect, as well as what happened last week. But with that in mind, I want to thank you guys so much for watching, and good luck out there this week. And as always, happy ticks.